Yo, this is how I lost $20,856 day trading the Nasdaq and S&P 500 this morning. Um, that title is a little bit clickbait because $1,000. It was around $1,300 for 8 funded accounts, and then I risked 4,000. I lost $4,719.49 on my live account. So I really only technically lost $4,719, but with copy trading my funded accounts, um, I lost $16,137 across the funded accounts, bringing a total of $20,800 that I lost across the funded accounts. Now, for those of you who don't know me, or if you do, that might sound crazy and that might sound like a lot, um, but it's not worrying me because I know that I'm a profitable trader. I know that I'm profitable in these markets, and hiccups like that don't scare me because ultimately I know that I will make that money back just by continuing to be patient and play out my strategy that I know I can make money with. Um, and I made $25,000 last month on my own capital, like just on my live account. And so maybe you're thinking, oh, well, you just lost almost all of that. Well, no, because that was on my live account, and I just lost 4,000. I lost like $5,000 on my live account today. So, like, I only lost 5,000 out of the 26,000 that I made last month today. Um, and yeah, that's 1/5. That sounds like a lot, but it doesn't worry me at all because I know my wins can be, uh, anywhere from 8,000 to $15,000 in one day. And now that I've figured out my trade syncer, unfortunately, the day that I get my trade syncer working is the day that I have a loss on my funded accounts. I literally had 2 wins on my funded accounts the past 2 days. Um, so it's a little bit unfortunate that the first day that I start copy trading, uh, I forget how many fundeds I have. Eight, I think 8 fundeds. Um, that day is a loss. But honestly, I was looking for a loss. To come, and so I'm not upset at all. I honestly don't think that my trades were entirely bad. Was my bias incorrect? 100%. And I should have seen what the market was doing. And now looking back on it, I can see what I should have done, and it's pretty obvious now. Obviously, 2020 vision is clear, but it is pretty obvious what I messed up on, what I didn't see, what I did see, but um, kind of read wrong. And what I can do moving forward. So I lost $20,000, $20,800 today, almost 21 grand today in one day. But guess what? I paid the market $21,000 today, so I damn better learn something from it, right? If you are losing money in these markets and you're not learning anything, you're literally paying for an education that you're not taking anything for. So my mentality is I paid $20,000 to learn a lesson today, so I'm better learn a lesson, and I'm gonna study what I did wrong and what I didn't see and where I could have improved, and I paid for that lesson today, so I better learn from it. So with that being said, we can jump into today's trade. Um, so we had, let's start with news. We had non-farm payroll come out this morning, uh, and at 8:15 a.m. And as you can see, there was a huge sell-off from that. Um, so if we move to, I guess, even the 5 minute, right? So this was the sell-off at 9 a.m. when I guess when that news actually came out. It says 8:15, but I guess the actual news came out at 9. Is what that usually means when we have that big of a reaction. Um, so we had obviously it came out bearish. Markets dumped. Um, first first thing that I failed to recognize. So we did create a high time frame SMT before news dumped. As you can see, NQ had a high right here and a higher high. We came and swept out this hourly high at 10 a.m. on the 2nd of December. We swept out that high on NQ. and we failed to sweep that high on ES. So as you can see, we coming into pre-market, obviously now we've swept it, but coming into pre-market, we did have that high time frame hourly SMT. And here's where I first failed to think of this. And I obviously looking at it now, it's clear. But that, in order for that SMT to play out, right? So honestly, I may as well make this into a little bit of an educational video. I don't know how, yeah. So, hold up. Let me go to a higher time frame so it doesn't look like that. This is actually good to talk out and a learning experience, but let's say that this is what the market looks like. So we have all these highs, and then NQ comes and sweeps those highs, right? So we'll just say this is NQ. This is NQ. Then we have ES. And ES has similar price action, right? But fails to sweep that high and then continues lower. So we can call this ES. So when we're looking at these, when we're looking at the chart like this, and we have continuous price action that looks the same between the indexes, but then we create that SMT. So we have NQ creating the higher high, and ES failing to sweep that high, creating a lower high. So this is where we're creating an SMT between the two indexes, where they have an inverse, they have a difference in price action, and they are making the same movements throughout it though. So with that, when we're looking at the markets and we see this, we want to be following the leading index because it has more, in this case, more bearish pressure, like today. Now, in order for this SMT to play out, how can I change the color? In order for this SMT to play out, we just need to sweep the high, I guess, even the low resistance liquidity, but as much liquidity as possible. But technically that first piece of liquidity is what would make it so that, here we go, so that SMT played out. So in this case, right, this, as long as we sweep this low, we have played out the SMT. The SMT has played out. So again, for ES, that would be right there. So as soon as we sweep those lows, the SMT has already played out. So we're no longer considering that SMT to move lower. And so what that means is when we're coming down, and if we're right here in price action, we can still consider this SMT hasn't played out and we need this low to call it a complete SMT. But if we're already down here, if we're already made this move down and we're right here in this price action, then the SMT has already played out. So what we can do is go ahead and disregard it. It already happened. The move has already happened. So again, on the leading index per se, if we're here, we haven't had the SMT play out yet because we haven't swept that low. But as soon as we do, price is no longer playing off of that SMT. It could reverse because the SMT has already played out. So with that being said, with what the markets did today, let me clean this up real quick. With what the markets already did today, or sorry, with what they did this morning, we already played out that high time frame SMT, and that's what I failed to realize. Because yes, I'm gonna clean up some of these because I didn't use them as draws and liquidity. But yes, we had this high time frame SMT, right, with ES as the leading index. But as soon as we swept this hourly low, this hourly SMT, as soon as we swept the nearest hourly low, the SMT has been completed. And so what we can use that for is that I should have immediately, when this got swept, boom, delete the SMT. It's already been played out. I'm no longer using that to aid in my bias of, okay, I think we want to go lower, which was obviously my overall bias today, as you can see. And I took 2 trades today. So also, when that high time frame hourly SMT played out, right, delete, no longer considered in our bias, we actually created a high time frame bullish SMT in the same process, as you can see. So this low on NQ failed to get swept, creating a higher low. And on ES, we did sweep this low. Oops. On ES, we did sweep this low down here. Barely, but we did. And we created a bullish SMT with a lower low. So now, in order for this to play out, what liquidity do we need to sweep? Right here. And what happened? So that's what I didn't take into consideration. The SMT played out. I don't think that a bearish bias here was honestly a bad analysis, but that's the first thing that should have immediately cued me into, okay, in order for this bullish SMT to play out, we have to go back up and sweep this at least this high. And it would have been a great risk to reward, a great trade today. I could have made a lot of money if I had just zoomed out, thought more about what price was doing, what it was showing me, instead of thinking, okay, yes, and here's where my original bias was, yes, this hourly liquidity down here is the closest draw in liquidity, which is why I took my first trade on NASDAQ. I wanted to see this hourly low get swept that we created when 10 a.m. candle closed. And then ultimately, I really wanted this low, since we got so close to it, it was a high draw in liquidity, and then extended profits down here. But immediately, I should have realized the SMT already played out. We created bullish SMT off of the bearish SMT. And on top of that, we have news, which created a huge imbalance. Dude, I don't know why price is not loading. It's really slow. We have this huge sell-off from news. I mean, 900 ticks from news. That's an insane move. So automatically, I should have expected price to be choppier today, which, as we can see, it was, right? Because a 900 tick move, I honestly should have just hopped off the charts and not traded. A 900 tick move from news is that was our move for the day. So now, if I wanted to trade this, which I easily could have, not saying you don't need to trade when this happens, but I easily could have. What I should have realized is that the SMT was formed. My bias should have flipped to bullish. And on top of that, this huge sell-off. Normally, we want to continue that sell-off, but we also normally want to rebalance this imbalance. So we created a huge hourly imbalance right here. 2 hourly imbalances. Normally, when price does that, we want to go and fill that imbalance and rebalance it. So there's a void of liquidity in here. I should have immediately thought, okay, bullish SMT formed, bearish SMT completed, and we have an imbalance to the upside that needs to be rebalanced. Automatically should have flipped my bias to bullish and realized that we were going higher. And we wanted these highs, which we did. It would have taken till damn near market close, but it did happen. ES went even higher. I'm sorry, NQ went even higher. No, yeah, ES went even higher. Took out all this liquidity. And it's stacked liquidity. I should have immediately... It's stacked liquidity. This is huge draws. Even though we're all the way down here when market opens, and yes, the closest liquidity is right here, we completed the SMT. And we created a bullish one. So as long as that bullish structure holds, why am I not taking longs? So again, this is going to be a longer video because I paid $20,000 to learn something from the markets today. So I'm going to learn something. We want to come and rebalance this imbalance. This is why we use fair value gaps. They're used for reversals and continuation, which sounds counterintuitive. But yes, here, even if we wanted to go lower down to these lows, which was my original bias, which is a fair bias since we're that close, we should have wanted at least to fill this fair value gap. Now we barely did, and which is why also my bias was a little bit fair, expecting bearish, because we did technically fill it, and we had, as you can see, 9:30 a.m. we came and we filled it barely, but we did. But I should have expected us to want to rebalance this imbalance by at least moving up to equilibrium of it, so the 50% range. Now, let's get to my actual trade. So, right, coming into market open, I wanted to see these lows get swept because it was the nearest draw, high time frame draw on liquidity. I ignored the bullish SMT because I was thinking about the bearish SMT, but incorrect. The bearish SMT played out as soon as ES took out this low. So, on the 5-minute, I wanted to see a retrace to this 1 hour imbalance, which we got, and 1 hour equilibrium, which we did not fill. But technically all I need is an imbalance to get filled as a 5-minute retracement, which did happen. Let me clear this, which did happen right here, as you can see, to the tick. Like we barely filled it, but we did. So that is according to my rules is a sign to scale down. And obviously we did sweep liquidity, high time frame liquidity. It was before the sell-off. So I scaled down. This is still in my rules. Oh, real quick actually, because again I did want to see equilibrium get filled, and it on the 5-minute, and it didn't get filled. But on ES it was super close. So it's drawn out for my second trade. But as you can see, the equivalent high is right here at 9:30, and it got really close to filling equilibrium, even at 9:40, really close, and create a 5-minute bearish SMT. It got really close, but it didn't fill equilibrium. I didn't like that, but I decided because of the bearish SMT, 5-minute bearish 5-minute SMT that we played off, I figured that, and we filled this imbalance a little bit, I figured that it was enough to push us lower to at least sweep the only low that I wanted to see get swept on NQ, not this one. Yeah, this one. This was my take profit and move stops to break even. That was the trade today, right here. A 0.73. And then keep extended profits down to here. So anyways, we created a 5-minute SMT as well. Almost filling equilibrium, but not quite. If we had filled equilibrium, I would have been even more confident. So I was scaled down to the 1 minute. Again, I don't think today's trade was necessarily bad, but there was definitely parts that I could have done better. And so I'm learning from it. And we're not going to walk away from this without learning something. So again, the 5-minute bearish SMT, all I wanted was a 1-minute break of structure, which is fair too. This goes along with my rules. I'm not disobeying my rules at all. I followed my rules. We actually created a bearish for value gap, but it got inversed right here. So I deleted it as soon as it got inversed. Right. Right there, as you can see, but it got inverse, so delete. Create that SMT. Now I just wanted a 1-minute break of structure. So originally we're looking here, then we formed another high, we're looking here, no break of structure yet, no entry, then we're looking here, and you might be saying, wait, we didn't break structure right here, but we did on ES. So we did on ES right here off of this at 9:49. We did break structure. So I entered. short at 9:49. Yep. 949 right here, entered short. And then stops above the SMT because I really didn't have a 1 minute confluence, which again, looking back on it, I should have waited for a 1 minute confluence. The reason I didn't was because, again, this is where great mindset, I was thinking correctly, but I didn't consider the inverse. So what I was thinking was, we have all of this, we're creating a bunch of low resistance liquidity on the 1 minute. You see this like kind of trend line that we were forming. I was like, okay, well this is all low resistance liquidity, low resistance liquidity, low resistance liquidity, low resistance liquidity. So all of this, I was like, okay, that's all easy 1 minute grabs of liquidity that we want. But what did I not think about? We're creating low resistance liquidity to the upside too. As soon as we started this downtrend, as soon as I started looking for 1 minute entry, we have all this low resistance liquidity. Low resistance liquidity, 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 low resistance liquidity. So I'm sitting here thinking, okay, I'm willing to enter short here because we have low, 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 1 minute low, 1 minute low, 1 minute low, 1 minute low that we want to get swept. It's easy liquidity. And guess what happened? We came down. As you can see, we start sweeping it, and we're generating low resistance highs, low resistance liquidity to the upside that I'm not even accounting for. I'm too busy focused on my bias. So price starts making its move down. I enter. Guess what happens? Boom. Exactly what I thought was going to happen. We came down and swept all of this low resistance liquidity. We're down here sweeping low resistance liquidity. Took out all these lows. And what do? Boom. Shoot back up. And what do we take out? The highs. The 1 minute highs. The low resistance highs. So I married my bias a little bit. I think the mindset there was correct. And we had the SMT. So ES had already swept these highs. So fair. If I had even thought about it, that probably would have been my argument. 1 second. I got to make sure I don't need to go to dinner. Yeah. Okay, I'm good. We had already, so we came down and we were sweeping these lows, exactly what I wanted. And I was going to move my stops to break even after this low, because that's the last 1 minute low resistance draw. But we didn't get there, unfortunately. We swept out the very last low besides that one. And boom, price shoots higher. What do? We get all this low resistance liquidity on the highs. We fill this imbalance. Okay, so that's first loss. First loss trade right there. What I could have done better. Anticipated wanting to sweep these highs, then looking for a 1 minute inverse. What happened? I got back. I stayed on the charts. I believed my bias was still fair. Now we had imbalanced this even more. ES, I'm pretty sure it came up all the way to this hourly equilibrium. I'm actually confident it did. Yeah, it did. ES filled hourly equilibrium. So I'd already been stopped out at this point. Now I'm like, okay, well, we've swept all of this low resistance liquidity, all these low resistance highs. We just created a clear bullish fair value gap. I want to see that get inversed. When it does, I'll enter short again. That's what this should have been my one and only trade today, honestly. And we created 1 minute SMT at these highs. So, NASDAQ made a high and then a higher high. ES made a high and then a lower high. Right here to here. So, again, pretty confident, right? We want to get lower, get all of this. We'd already collected all this low resistance liquidity, but I want to see this high resistance liquidity, hourly liquidity get swept. What happens? We inverse. Original game plan. Again, this is just where a little bit unlucky. Original game plan was enter off of this inverse, and ideally it would inverse like somewhere like literally right here. And then I know it seems tight, but move stops to break even as soon as we hit 5 minute equilibrium. a 5-minute bullish equilibrium. So the only thing here that would have interrupted my bias was hitting 5-minute equilibrium and then pushing higher, which is exactly what we did. The problem was that when I entered here off the 1 minute, we were so close to the 5-minute equilibrium point, which is what's marked out here at that point, that, and I can delete some of this now, that the 5-minute equilibrium just was too close to move my stops to break even. So regardless, as you can see, inverse this 1 minute created a bearish 1 minute fair value gap, and then which ultimately got disrespected. We even closed 1 minute candle underneath equilibrium, as you can see at this candle right here, right there. So we actually closed underneath it. I was like, this looks good. No, just stopped out. We wanted to fully rebalance this hourly fair value gap and get these highs up here. So again, was it a bad trade? Was it bad analysis? Not really. By the time I'm right here, we're probably close with these highs. So this closest high is 107 ticks, whereas actually no, 93. So still this was the closest draw on liquidity. So I don't think it wasn't a bad trade to take. Neither of these were, I don't think, but I should have considered both biases coming into the market today. So ultimately, yeah, I paid $21,000 to learn this. But honestly, it's great to walk through it. I'm actually glad I got to speak all that out because it's good to hear myself sometimes speak it out. And yeah, I think the mindset was there. I wasn't rushing a trade. I followed my rules, but I should have thought of everything. The SMT played out. The bearish SMT played out. We created a bullish SMT off of the bearish SMT. Immediately don't consider the bearish SMT anymore. Bearish SMT played out. Bullish SMT created. 1 minute liquidity, low resistance liquidity to the downside I wanted to get swept, and it did, but the highs we were creating low resistance highs at the same time. Should have waited for those highs to get swept, fully swept. As you can see, they did, right? They ultimately got swept. That's what this move did. And then this trade, not a bad trade at all. At that point, the only thing I could have done better, I guess, was wait for us to close 1 minute under equilibrium, under the 5-minute equilibrium on the 1 minute, which would have been right there. Same outcome would have actually happened. But we got a little bit unlucky today with moving stops to break even, and ultimately the market's going to do what it wants to do. I should have thought about the imbalance wanting to get rebalanced. I should have thought about the SMT playing out already. I should have thought about the 1 minute highs that we were creating as low resistance liquidity, not just the lows. So ultimately, honestly, I'm not upset with today. Again, I know that I'm a profitable trader. I know that I'm profitable in these markets. I know how to read these markets, and I know what I'm doing. Ultimately, I don't think the psychology was wrong today. I think my headspace was good. And honestly, I think my emotions are getting a lot better. It is just a number on the screen. My buddy always says that. Shout out, Matt. If you're watching 30-minute video, bro. Hey, man, you're dedicated. I like it. And it pays. It pays. Today, it paid to get a lesson. And you know what? If you're sitting there and you don't understand these markets, and you're getting stopped out, learn something from it. Write it down. Journal. I journal, man. So I still journal. And I made $25K last week. I lost $5K today of my real money. Lost 20 bands today across fundeds. It's part of the game. Learn from it. I'm not too scared, man. We're going to come back, and we're going to come back heavy. Next P&L you're going to see is fucking 30K. 25K in a day. You're about to see that soon. And, it's crazy because, just last year, man, losing thousands of dollars a day, paying thousands of dollars for funded accounts just to blow them. My roommate was just telling me that the other day. I don't tell too many people about this, but, like, that shit sucks, bro. You're trying to learn this shit, and you're just blowing fundeds. Man, it sucks. It sucks. Blowing fundeds, and you feel like you can't figure it out. But I promise you, if you're like me and you have a losing day today and you got crushed by today's trade, I promise you, you stick to it, you journal, you realize what you did wrong, and you speak it out, you will be profitable in these markets, and you stick to it, and you follow your rules, you can make money. I went from losing thousands of dollars every week, paying for funded accounts, to making thousands of dollars in one day. You're over here wishing for just a 10K month. You're just hoping for your first 10K month. Bro, it is so much more. It will be so much more than that, I promise you. You're over here praying for your first 10K month, boy. Bro, the first time when I was praying for my first 10K month, I made 10K in a day. That month, that first 10K month that I was hoping for came in one day. When you slow down, you take high probability setups. Bro, I remember I just wanted my first 10K month. And my first 10K month came from a 10K day. It's possible. Just stick to it, I promise you. It will be worth it. And if you're like me, I paid $20,687 today to learn a lesson in the markets. I paid for that. So I'm going to learn from it. I gave the markets 20 bands today. So you best believe I'm going to learn something from it. I ain't paying 20 bands to learn nothing. So hop on them charts, journal, and don't make the same mistakes again. In my journal, I literally have a section that's called Mistakes to Never Make Again. Journal. Learn from your mistakes. If you're going to pay the market back, learn something from it, and it will pay you the next day or next week. Slow. Monthly timeline, yearly timeline. Also, real quick, before I end this, I just want to say my day trading signals, right? If you go to join now, okay, I have a 75% off day trading signals right now for the signals group. If you want to join the signals group, I think it's funny that I'm promoting this on a day that's minus 21 bands. If you want to join the signals group though, come in here. I'm not logged in, so I'm the admin, so I can't join. But if you click join and then you do code all caps Tate Trades, no spaces, 75% off, and you can get access to the day trading signals that made me over 25K in a month. You can get access to those signals for $25 your first month using that code. So if you're interested, even if you just want to try out 1 month, $25 for those signals, usually 100, and that promo code has been extended till this Friday. So if you're interested, check it out. If not, thanks for watching this video. Matt, bro, if you're watching this, you're gonna make it, bro. You're right behind me. So everyone else, stick to that grind. Sorry for the long ass video, but it's good shit in here. All right, see ya.